and gentlemen, moving on to the panel, which is GST second generation reforms, including technology. Let me begin by inviting onto the stage the anchor for the session, Mr. Prateek Jain, partner PriceWaterhouse & Co. LLP. A very warm welcome to you, Mr. Jain. And now let's invite our esteemed panelists for the panel, starting with Mr. R. Venkatraman, Additional Solicitor General, Supreme Court of India. We'll just get it. So you can take any seat, we'll get it done. Ladies and gentlemen, let's welcome our next panelist, Mr. Shashank Priya, member GST CBIC. Let's hear it up for Mr. K Sinha, CEO GSTN. We're also very glad to have with us co-founder of OfBusiness, Mr. Nitin Jain. And a final panelist for this session is Mr. Radhe Shyam, GST Commissioner of Mumbai. Ladies and gentlemen, with a generous round of applause, let's welcome all our panelists on this panel and hand it over to our anchor, Mr. Prateek Jain. Over to you.
Thank you. Can you hear me? All right? Okay. So today, this is the last session, and I'm privileged to have such a esteemed panelist. So I was thinking that rather me asking questions, maybe we'll turn it to you to ask questions, and maybe I'll just set the context and move on. And being in corporate for over 20 years, you know, we love to use jargons. And one of the things which is my favorite is, which works anywhere in any situation, is a lot has been done, but a lot still needs to be done. And that's my favorite, all-time favorite. Whenever I don't know about a topic, about a subject, I kind of use that. Always works. Or say things like, you know, we need to rationalize. And rationalize is also a very beautiful word, can be used with anything. I think if you look at last 6-7 years of GST, it has brought a lot of structural simplicity. I think all of us will agree with that in terms of supply chain, in terms of C forms, F forms not being there, and so on. But I'm not sure whether the same can be said about ease of doing business, right? That's one part. From a government perspective, if you look at, we are in a good space right now, 1.6 lakh crore collection every month. One would argue that could be much more, but it is much more than the target for FY24. I think we are likely to exceed our target by 60-70,000 crores, if not more. Last year, we exceeded the target as well. We're seeing a good buoyancy on the tax collection. The number of taxpayers have increased from 60 lakh to 1.4 crores after GST has come in. So obviously, the tax base has increased. From a technology standpoint, you know, I think we have done very well. After initial teething problems, one would say that GSTN has stabilized a lot of path-breaking things that are happening, and we'll come to Mr. Manish Sinha closely, and I want to ask him things like, you know, whether artificial intelligence will overtake all of us, and after 1 or 2 years, artificial intelligence, maybe robot will do the assessment and audits and maybe argue in the courts as well. And some would say on a lighter note, sir, that by the spate of notices that we have seen now issued on 30th of September, many of them seem to have been issued with minimum human intervention. Let's say that. So I think there also we are in a good place. And Mr. Venkatraman is here. We'll just touch upon a bit more on what kind of reforms do we need, what kind of judicial reform we need. So 3 baskets under which I want to have the discussion. We're talking more futuristic. We're not talking more about the existing issues. We're talking about second-gen reform. We all know, practically speaking, nothing will happen till next year, after the elections are over. After that, we see things happening at a much larger, on a much faster pace. So legislative reforms, tax administration, what are the reforms on technology that we are going to see, and what about judicial reforms? That is what we would keep our thing on. But maybe we will have an initial round of discussion unless any of you have a quick question for the panelists. Maybe we can start with that. Anybody wants to make an initial comment? Any questions? Okay. Can you just give the mic? Maybe we'll start with the question there, and then that's okay with all the panelists, right? So because it's better to hear from what. Can we have the mic there, please? Okay, we don't have a mic. So, okay, I'll come back to you. Maybe, no, let's wait for 5-7 minutes before. And maybe I can start with the legislative reforms. And coming to you, Mr. Priya, we have all talked about, today for first 6-7 months, 6-7 years, the intervention by the government after GST law came in has been more tactical, right? So if there is an issue, we have responded to that. But we have really not looked at simplification of law. One thing which keeps coming up, and a lot of people sitting in the room might be aggrieved about that, is the whole input tax credit provision, for example. We have created artificial barriers to say, CSR expenditure not allowed. Many of the employee-related expenses are not allowed. If I'm constructing an office or a factory, whatever GST I pay, that's not allowed as a credit, and so on. One is the policy part of itself, and one cannot dispute with the policy that, okay, fine, the government believes that credit should not be allowed. But it is leading to a lot of disputes and litigation as we go along. There was a law review committee which was set up in 2018, which apparently recommended that some of these restrictions should go. I remember on construction, GST paid on construction should go was a recommendation. Do you think that as we look at the next phase of legislative reforms, this should be one of the priority areas for the GST Council and the government to look at?
Let me first start the session by thanking the Tax India Online and Mr. Shalinda for inviting me and for allowing us to also exchange our ideas. As far as Prateek's question is concerned, number one, the ITC provisions that were formulated, that was after a whole lot of intensive discussion. And there were always two sets of opinion, whether this particular ITC should be allowed or not allowed. And whatever was arrived at was some sort of a balanced outcome, where consensus had to be reached between the center and the states. And that is the conversation that goes on. So I'm not sure whether we can say that we should have a second generation reform only when we need to look at all these things. For instance, we have at present issues relating to telecom companies with regard to their input tax credit on towers, the active parts that are used on towers. Then there are certain optic cables that are used in towers, which are that are used on the ground. So these are all very sort of issues that has an impact on the economy as a whole, because that will depend upon, that will impact the cost of rolling out 5G. So we are in conversation. We are trying to see whether we can get this process forward and we can have input tax credit allowed on these things. But as you know, GST is a very collaborative and a very consensus-intensive process. So till all the states and the center, all of them are not on board, it will not happen. So it is a work in progress. Coming to what you said, yes, absolutely, some of these things we also internally feel do need a serious look. Some things that sort of hold us back, one is the revenue consideration. Second is always a risk of misuse. So what perhaps we should look at is, we have had this conversation before that if we can, with the help of GSTN, arrive at what is the revenue implication. Say, personal used things, for motor cars, for insurance, for some other items that are allowed, which are smaller items. And slowly we start looking at opening some of them in phases, or we can work out a roadmap. So there is definitely room to look at simplifying the ITC regime so that there is less dispute and more capital availability.
Yeah, so therefore, there's a ray of hope, if I can take this conversation on that. But Sticking to ITC per se, there are few sectors where ITC has been blocked. When we started, for example, restaurant, you had 18%, 12% rate with ITC. We have blocked that. For real estate sector, also ITC is not, let's say residential real estate, I pay 5%, no ITC. Again, purists would argue that from a technical standpoint, and at that point in time, there was also a concern whether industry is passing on this input tax credit benefit, but now anti-profiting provisions are more or less sort of dying down. So in that context, sir, do you think that there is a possibility of some of these restrictions to be reviewed to say, let us give an option to the industry, whether they want to pay 5% without input credit, or they want to, let's say like transportation. You want to pay 12% with input credit, and let that option be with the industry.
Yes, that's definitely a thought. And but as far as, the restaurant service is concerned, since it is there is already for 5-star and all, the rate is different. And for rest of the restaurant services, it has a very strong public perception issue. That is how it was discussed in the GST Council. Because even if you have blocked the input tax credit, that doesn't mean that consumer is necessarily benefited, because the cost will get added, the input tax credit that he is not able to use that will get added to the final cost. But there is a very strong public perception element that the GST Council members took note of and said that for restaurants and all, the rate should be 5%. So going forward, I don't see there much traction at this stage that we should look at either or option. But one can always carry that conversation forward.
Thank you. Sir, coming to you, and we need perhaps a lot of people here would argue some bit of a judicial, so to say, reform as well. And I want to first focus on, are there any avenues for the government to reduce litigation? Let's take examples of something like a settlement commission, which is, of course, there in customs, not there in GST. At some point in time, there was an ombudsman scheme, which was there, which has now been withdrawn. There was a pre-consultation before issuance of show cause notice, which was mandatory. Now it is optional. There is no conciliation process. Some would argue on things like arbitration and things like that. And unfortunately, and of course, we are talking about today's situation where even tribunal is not there, and hopefully next few months, tribunal would come. But today, and frankly, and sorry, at the risk of sounding little difficult, the kind of notices which have been issued to meet this 30th September deadline, some of them are so frivolous. I mean, you look at a balance sheet number and just put that 18% on that as a notice, right? And many of them, looking at the trends in the past, will get confirmed at the first level. I need to go to the tribunal if the tribunal is set up at then, and 50 crore is the potential pre-deposit, which was much lesser in the earlier regime. So the question I have for you, sir, what are the things that one can potentially look at to reduce litigation? One is simplification of law, of course, but is there any process between now and till the time I have to go to court? Can we do something to reduce litigation as we go along?
If you take the number of cases that had happened during the excise regime, during the VAT regime, and the number today in GST, the ratio is fairly to the advantage of the government, whether we like it or not. That's the fact. So whether you should compliment the government or not, that's your choice. But it is less. But the converse is also equally true. The number of show cause notices seeking the quantum of demand and the lesser number of show cause notices with an increased demand under the GST regime, that shows the way the business models have evolved. It's more an indicator to that extent. So this is in terms of the number game. 2, tax and arbitration in my personal view, are sworn enemies. Because having currently doing international arbitration work across all the continents, it is such a painful process to arbitrate tax. It's not, you better interpret rather than arbitrate. Arbitration leads to more arbitrariness than interpretation. This is my personal view. 3, yes. See, we should look at settlement commission, which we will at some point of time, it may emerge ultimately. But see, there are, even though optional or non-optional, if an assessee is fair enough to come forward and pay, if he is found at fault, then certainly mitigative schemes are available in the existing provision itself. You can't have the aspiration to litigate and also go for conciliation. They are mutually exclusive. Either choose the part of conciliation, you have several reliefs available to you. Don't choose the path of conciliation, then you fight it to the logical end. 4, the biggest difference we see, especially as an ASG in the last 4 years, I say this very clearly, and it's a big hope for the industry. When I had been an SC counsel for 3 decades, there are 2 branches of law where courts will always assume in favor of the government. One is criminal law, another is tax law. Even though in both the law, the innocent is always presumed. But courts were acting to the contrary. But 4 years of my experience, so many young judges have come across India. So many judges with liberal thoughts are there in potentially in judging matters. And therefore, judging abilities, judging perspectives have gone a huge change in India. Now the judges presume, before granting a bail, they presume the police would have acted in an indiscriminate way. And before examining a notice, they assume that the officers would have committed the mistake. So it's an Herculean task for us to win each and every case. It's no longer easy. So bad notices will be interfered. See, bad actions, let's be very clear. We don't want to collect 1 rupee more than what is due. Okay? Bad actions need interference and it should be interfered. But if something is due, if somebody is going to avoid, then the long arm of law will certainly reach out to them. This is exactly the policy, at least we follow ethically in our litigation. In these 4 years, more than 300 opinions I would have given personally, saying that High Court judgments under income tax or in GST need not be appealed. 300 cases. Okay, where there is no case, we don't, and that government and the department ministries trust us, our abilities. So we are given that freedom. So we don't push for bad cases. But good cases, deserving cases, it's up to you to come for a conciliation or up to you to fight. This is at the litigation level. I got just 2 minutes if you can give me 2 of the questions which on ITC. See, currently we are fighting the biggest battle on ITC on the construction industry. It has been heard for the last 4 weeks, and the last hearing is concluding tomorrow. So matter is sub judice, but therefore I will not be able to open up and say. But you must understand the theme. In the construction industry, if you are not having the completion certificate, you go beyond that and then release it as an immovable property, then it moves out of GST network. It goes into entry 49 list 2. So GST can never reach and tax it at any point of time. So when something is out of the GST network, how do you expect a pass-through to flow as an ITC benefit? You take Section 17, take every subclause of Section 17, how it has been drafted. The restriction, the conditions, or the blockage has preceded only one assumption. The output tax, when not payable, we will not grant you ITC. That's the logic for the building industry. As regards his point on free building, it is not actually a free building. Okay, you give your space and he gets the benefit. Therefore, it is a case of a barter. It's not free. And Section 7, the definition of supply includes, because he wanted an answer, I thought I should Section 7 includes barter because we borrowed it from the sales tax legislation. It was not there earlier in the excise law, but sales tax law had it. When we made it into a supply law, we borrowed barter. What you assume as a free building is not a free building. You give a land, he gets his share as a building, and you get what you want to construct. Therefore, he takes the price. How he gives it or not, how the recipient takes it or not is not a matter of judicial concern. The concern is whether it has been factored into pricing. So this will be the perspective one will view on your issues. These are three. Thank you so much.
So you've got your answer, maybe not the answer you're looking for, but at least the answer nonetheless. Okay, so let me come to you, you know, we were debating about this, how to reduce litigation, and you have seen perhaps large industry in your commissionerate as well. Anything that the government can do? A few of the things we did discuss, Sir mentioned that settlement commission might come at some point in time. The model GST law, in fact, had the draft GST law, which had come long time ago, had a provisional settlement commission which they would do later. But things like conciliation, things like ombudsman, anything else that the government could do, or maybe what would your expectation be from the industry? Because you've seen maybe, you know, many of these large players also, and maybe some bit of caution that they also need to exercise while doing their compliances.
Thank you for giving me this opportunity to answer this question. Before that, I would like to thank Shailendra Kumarji, editor of Tax India Online Limited, for giving me this opportunity to come here and answer some of the questions which are really taxing questions. And this has been agitating the minds of many people who have a legal background. Is it audible?
A little closer to.
Okay. So even within the department, those who are from a legal background, they may have slightly different perspective. Of course, what I will say here, it is my personal views. It doesn't represent the views of CBIC or the government. So to that extent, I will clarify. In my limited jurisdiction, I have made some points. I have written to my zonal chief commissioner. The laws have been so framed that it leaves ample scope of differing interpretation. Okay. So I think now it is audible. So for example, I will just give one example which I have written to my zonal chief commissioner. I don't know whether it has reached the board or not. Member GST is sitting here. There is a conflict between different subsections of the same section. Like section 16.2 and 16.4. There is a conflict. Section 16.2 says there are 4 conditions. If those 4 conditions are met, then the person is eligible for the ITC. But then section 16.4 puts a time limit. It says up to a certain limit. Earlier it was last date of filing of return of September of the succeeding financial year, and now it is 30th November. See, in one particular case, while doing the audit, it came to notice that the taxpayer had he had filed the return of September 4 days late, and that late fees was paid. So now we have a section 37, which allows you filing the return after paying the late fees. Then section 39 enjoins upon you to file a GSTR 3B. So question arose when all the 4 conditions of section 16.2 are met, whether for these 4 days delays, a huge credit should be asked to be reversed, and then litigation will start from there. Because it was certain that taxpayer will not pay that amount, and the matter will ultimately end up at the doors of Supreme Court. There are a number of judgments which have explained that there is a clause, non-obstancy clause, notwithstanding. So what is the scope of notwithstanding? This phrase has been used in company law also. It has been used in our own section 129, I suppose, or, which allows that provisional release of seized goods. There again, this word is used. And there, then if the conditions are fulfilled, the department has to release those. So similar provision here is here, but now courts are also giving different judgments. Like one court has recently given a judgment that 16.4 is sacrosanct, that his ITC will be denied. So I think you may be knowing that various other high courts also are seized of this issue. So while framing the law, my point is that we should ensure that there is no conflict between the subsections of the same section. Similar is section 17.2 and section 17.3. There section 17.2 talks of the exempted supply, and section 17.3 gives the valuation aspect. So there is a conflict there also. Since time is not much, I will not elaborate on that. Since in the morning, I read your article, which was presented to CBIC, I think,
Yes.
2 months back. So you have given some suggestions to reduce
So one
litigation.
takeaway, sir, from you what I'm taking is, and though you're saying that in a personal capacity, but clearly there is a need for simplification of law. I think that's a point that we have been highlighting for a long time to the government, that we need to simplify the law. And we don't have any qualm to say, look, we don't want to pay the taxes which are due. For example, if you believe that employee-related taxes, expenses should not be allowed, you give me an option to say 2%, you do that analysis and say 2% of your total expenses will be deemed to be towards your employee expenses. Matter ends. Because today, for each invoice, I have to show whether it is related to my employee or whether it is related to my business. And then that's really a painful exercise. And we all are on the same side of the table here when we talk about ease of doing business. So coming to you, Mr. Manish Sinha, now you are, of course, sitting on a wealth of data, and everybody is talking about data, and everybody talking about artificial intelligence and blockchain and all of that. Industry has been asking for 2-3 things. One particular thing where I want to take your sort of inputs. Should we start looking at GSTN as a platform of the data that we have as a taxpayer services, in a sense that can we analyze that in a more meaningful manner and present it to the industry in the form of a data analytics and so on. The other is, and I know that you might say that, look, it's a policy level thing, but today for each state, you have to maintain separate pool, SGST, CGST, and so on. And this is also leading to a lot of working capital issues. Earlier in the erstwhile regime, at least you have the thing of large taxpayer unit, where at a central level, you can have all taxes together. And Mr. Shashank Priya did mention that states and center have worked together in GST. And some of that discussion, perhaps we have taken the worst out of the law, because of the VAT, you at least had a refund provision of your accumulated credit. Now under GST, there's no refund provision. So what are your thoughts about having a common single wallet for credit, at least at a CGST level, if not at a SGST level? And the last question, we recently read an article in newspaper, and we have discussed in the past about having a vendor rating, and there is already a provision in the law for that. How soon are we in terms of getting that into reality?
Well, you have debarred me from giving the answer that this is a policy decision, but all I will say is whatever you are saying, from the perspective of technology, almost everything can be implemented. Technology is not the reason why some of these things are not happening. Now, first on vendor rating. The challenge of vendor rating is this, that if I do the vendor rating and the vendor is rated as 9 out of 10 and his invoice is found to be an invoice on which ITC is not available because of some fraud, then does his rating become a defense for the person who has availed the ITC? So that's the doubt and debate because of which it has not come. The alternative which we have worked through to overcome this problem is, if you have to do somebody's rating, then there are perhaps 10 or 12 kinds of inputs which will go into what are the kind of people he is buying from, how old is the registration, what is the nature of business, what is the size of the business, and so on and so forth. What is his cash credit ratio, and has he been an offender in the past? What we are doing is that in the page relating to know your vendor, over a period of time, we are expanding the information which is available to you. So as a person who's doing business with a particular registered person, you can yourself decide based on the information that whether he is a person worthwhile doing business or not, rather than me kind of giving him a score. Second is coming to fungibility of cash in the wallet which is deposited and it is leading to cash flow problems. I would like to explain that GSTN does not hold any money. GSTN simply maintains a ledger. Every money deposited by the taxpayer, which is a debit from his bank account, goes to a corresponding account in the Reserve Bank of India, which is the consolidated fund of that state or center. Therefore, what you are asking for is, can the money be withdrawn from one consolidated fund of a state and deposited into the consolidated fund of another state? Well, it will require quite clearly a very strong legal processes to be built. Technology will be very easy to build on that, but the legal questions are much deeper. Because you see, what is refund? Refund is essentially withdrawal from consolidated fund. You invariably build an entire legal procedure, somebody has to sanction, there has to be an audit. So it is not that easy an answer to give. Coming to the question of fungibility of credit. Fungibility of credit is, yes, an idea which can be discussed, but as far as states are concerned, even in relation to fungibility of CGST on the same PAN for registration across various states, states have their own view that each registered person is an independent identity, and this issue is very sensitive for the state because there is an issue of sovereignty involved here. Therefore, any dilution in that is not easy to negotiate with states. Finally, how much of data can be brought to public and how much of data can be brought to the industry for planning? I think government is thinking in that direction. We are slowly expanding the pool of data which we are placing in public domain over by and by. And here I have, in fact, a suggestion and request to make to the industry. Please improve the HSN quality of the data which you fill in GSTR1 in table 12. It's absolutely useless. Therefore, I cannot really give you good quality sector-based data. Not even 40% of the people are filling that. Be that as it may, very soon you will say e-invoice is giving us very good data. Some of the data which is sectoral, geographical, movement from point A to B, the kind of data which you would like to see as to how India trades within, what are the commodities, what moving from one place to another, those kind of data will shortly come in public domain. Some discussion is going on. Final decision will rest with North Block, and I'm quite sure that once the decision is taken, we will be able to place that in the public domain. Now, being an old person from the law and who has been involved in the drafting, all I will say is that conflict between 16.2 and 16.4, sir, is really, 16.2 is substantive, 16.4 is procedural law. White line laws are written in ITC provisions. In VAT regime, it has stood the test of Supreme Court. In excise also, time limit on availing credit has stood test of Supreme Court. Therefore, time limit for availing ITC is a closed issue. There are clearly two judgments of Supreme Court in favor of the revenue. Thank you.
Sure. Thanks a lot, sir. I mean, again, some of the answers, perhaps industry may not like, but the answers nonetheless, I guess. But you're right. I mean, so CGST, SGST fungibility, of course, very, very, very difficult. One knows that, sir. But then implementation of GST was difficult as well, right? But we have achieved that, sir. And there are countries in the world, I mean, let's say Denmark and Australia, where this GST excess paid is allowed to be offset against income tax. I'm just giving an example. So there are countries in the world which we have achieved, and there is no reason why in our Amrit Kal we are not able to achieve what others have achieved. Coming to you, Nitin, I mean, it's always showing time's up, and I don't know, Shalinder has been not fair to us. I mean, we had 65 minutes, but I think it's curtailed to the 35 minutes. But I'll still maybe take 5-7 minutes more. Any quick comments from you?
Yeah, so, so we work with close to 7 lakh SMEs, and they in turn work with 1 lakh CAs. And most of the time, the queries that we get from the SMEs is that, listen, can we get the correct interpretation of GST, or can we get the correct interpretation of this particular section, or can we just query, can we have information like a chat GPT where we can query and get quick answers rather than relying on the CAs who may or may not answer in time and take their sweet little time. So, we are working with a network of CAs to developing this this GST GPT type model where, whether you want to reply to a particular notice, or you want to essentially interpret a circular, or interpret the law with respect to your industry and sector. So you'll be able to really get that done very easily. And I think with the current large language models and generative AI coming into the picture, I think this is relatively easier to do now. Obviously, you have to work with a lot of data, and getting across current information to the consumer and personalized information is the matter, basically something that, we have to address immediately. I think that's something that we're trying to do. We're trying to democratize information so that they're not only reliant on CAs, and people can interpret on their own, and CAs can also, not rely on other people and get the correct interpretation and information.
Okay, thank you. Since I promised that we'll take some questions, I'll still take the liberty and handing off the mics there. Can we have mics here? Somebody has a mic? Or you can take mine, I mean, if there is. Okay. Technology is not helping us. Yeah, you take this mic. Take this mic. And please, let us be brief, and we are not talking about really the nitty-gritties and the particular section right now, but anything which you want to talk about or ask about the next.
Sure. My question is to Venkatraman, sir. Sir, with respect to what you answered to Mr. Gogri, my point is that in the matter that he discussed, the GST is being levied on the basis that it's a joint venture kind of an agreement. Now, typically, except for city like Mumbai, where there's a lot of redevelopment of housing societies, typically those kind of joint ventures happen, let's say even in cases like Delhi, where the owner has a large tract of land, does not have the means to, or the expertise to develop, and he engages the service of a developer. And that kind of a transaction is there in which the agreement is the developer develops, and let's say 40% of the kitty goes to the landowner, who is free to sell it also in the open market. Now, there is a clear case of furtherance of business in that transaction. Whereas if you look at a housing society where an individual is an owner, there is no furtherance of business. There is no transaction where the kitty that he is getting, he'll be able to sell in the market. He's only going to live in that house. So whether it is right to interpret and to apply that rule here is one question. Secondly, when you said that according to you it should be levied, then whether it is fair to levy GST on the market value of the flat, because actually even if you consider that there's a service rendered, it's in terms of the construction cost, because what you're giving essentially is building a house and giving it to him. You're not buying a new house and giving. So these are the two related questions which I wanted you to address.
On the second, possibly there is something which we can certainly work upon, on the second principle. But on the first principle, it is certainly a value addition. And see, we should not mix up taxability with ITC. It's exactly what we have been arguing for 4 weeks. Taxability is distinct from ITC. So, furtherance of business is a ground for allowing ITC. It cannot be a ground for levying tax. So that should not be mixed up. I'll just take 1 minute. We should, because the GST and CEO is here. Whenever our FM goes, there are 2 meetings in a year in the World Bank. World is baffled with 2 things: our UPI system and the success of our GSTN network. I think we should give him a round of applause.
Rounds of applause, please. Yes.
Yes, these are the two largest networks in the world, and the success rate is phenomenally high. So, good luck to you, and this is something which I thought I should share it to all of you.
I just want to concur with that. When we go and talk to our clients abroad, they're absolutely amazed with the kind of data that we're handling centrally. 1.4 crore or thereabouts registered taxpayer, billions and billions of transactions, e-invoicing, e-way bill. I think we should all be proud of what we have created.
And big part of the world is now working with us for capturing the UPI model in their respective countries. We are now becoming service providers. Settling contracts, I'm saying this. We should really be proud about what we are doing on the UPI front.
Absolutely.
And in the GSTN front.
Next question. Yeah, to hear it.
Yeah, this is a short submission. I'm A.K. Prasad. I was working in the department earlier. Now I'm a practicing advocate. So I've seen both sides of the fence. The issue is regarding reducing litigation. See, one of the issues which we see while practicing here is every show cause notice, I would say 99.9% invokes the extended period. That's a done thing. If a show cause notice is issued, it has to invoke the extended period. Now, if that can somehow be curtailed to a rational approach, I think that will substantially reduce litigation. I think assessors are not disinclined to pay where the tax is due. When there's an interpretation issue, he says, yes, finally, 6 months, 1 year, I'm willing to pay. But when we invoke 5 years, it becomes a matter of litigation. So my suggestion is, and the problem in the department is, if a person drops a show cause notice, he can be investigated against, but he confirms it, nothing happens. So it should work both ways. So I don't suggest a punitive measure, maybe some sort of a counseling. If someone has confirmed or issued a show cause notice or confirmed an adjudication order, which is not fair, I don't suggest that a punitive action be taken. Maybe a counseling that, look, this is not fair. Maybe a group of senior officers could counsel him that, look, this is not the way to approach. You've got to be fair, either in issuing the show cause notice or in adjudicating matter. I think this will go a long way in reducing litigation. Thank you.
Any comments, sir? I mean, I agree with the point that gentleman's
There is
making.
no disagreement, but I will tell you the jurisprudence of it. Let's understand, because as a lawyer, I can only share you the jurisprudence. Starting from Nathelu Sampati Shetty, 1959 Constitutional Bench judgment. Bad law should be declared ultra vires. Bad implementation of law cannot result in declaration of the law to be bad. That's the difference at the conceptual stage. But see, the indiscretion, the only relief I see in this last 4 years, certainly, earlier, an extended period of show cause notice has to necessarily travel up to the tribunal, if not up to the Supreme Court, to get it reversed. It invariably gets reversed at the tribunal today. That's the change you see. So, bad action, and if you go to now writ petitions on extended period, there are several high courts which interfere and say, we will quash the extended period, go and adjudicate on merits. This is happening. These are the changes that is now happening in the system. But it's better the officers change. It's a good concept, but they have their own constraints. So now the system is quite vibrant, and the assessee community should be feeling happy, and also the consulting community should be feeling happy about this.
Okay, one last question. Only one. Then, yeah, can you just go, Peter?
Hello. Mine is a policy question. So, I think GST has done a lot for taxpayers, specifically the valuation provision for cross-charge. There was a circular to that extent. Now, with the number of show cause notice that have come, and there is a line of show cause notice or disputes wherein the ITC was eligible to the recipient, or let us say, taking an example of secondment, ITC was eligible, but the dispute would go on mainly for the interest component. So we now have a jurisprudence, legislatively, there is no doubt that the power to levy interest is there. But then, in case of Supreme Court, in case of IntSwift, when credit was availed and not utilized, subsequently the government reversed the law and said, okay, because you have not taken any benefit, let me not charge interest. So now coming to the present context of GST, if it's a revenue neutral situation, just like a cross charge, if the credit is eligible to yourself or to the recipients, can interest not be waived? Because this would reduce the litigation to a large extent, because the disputes which the clients are facing are not vis-a-vis or the tax.
So I understood. So your question is that if the recipient is going to get credit,
yeah,
then waive the interest in the hands of the supplier.
Because it's a revenue neutral thing.
Sir, maybe this falls under your...
Yeah, this is a very live issue in the context of Northern Operating System judgment and what is to be done on that. So while we have certain sympathy on this sort of line of discussion and idea, but the point is, and this I have seen some of the Supreme Court judgments itself says, that every judgment that comes out of the court, that has a retrospective effect, because nothing is being, pronounced upon when the just law has been passed. So retrospectivity has to be, is inbuilt in the judgments that evolve and that is given. So do we then have a provision of law that wherever such judgments come, we don't take interest? As of now, we don't have such a provision in the law. For the first time, such a large segment of, taxpayer, vocal segment are asking that we should have a relook at this interest portion. But as the law stands, we have no flexibility to waive the interest. That would require a change in the law, which I am not very sure that the administration collectively as a whole has an appetite to do at this stage. But
sir, in the Northern Operating decision, the issue of credit is also being raised, that even if I pay tax now, whether that will be eligible as an input credit. There are doubts which have been raised in various places. Maybe you could consider holistically and maybe issue a clarification. Yes, sir.
Yeah, that is another issue where, one is what is the date from which the demand should have been raised. The second is what is the date, is it that invoice should be now considered because they will issue the invoice now since they concede their liability, or should the invoice be deemed to have been issued from that day? So these are the issues that we have to consider, but there is a ground to see that, input tax credit is given and that Section 74 is not invoked. But these are the issues that, again, as I said, it is not in the domain of just one government. All these have to be looked at holistically. So.
On cross-utilization and what he also raised, see, he wanted one consolidated fund withdrawal. It can't happen in India. It can happen in Denmark where it's a unitary state. In a federal state, you have to maintain separate accounts and you have to log in separately for CGST and SGST, and especially when partners are state officers and also union officers for control. See, in a federal setup, it always starts with compromise. There is nothing called a perfect mechanism which can work in a federal system. Give and take is the essence of successful federal functional arrangement. So a consolidated feature is something, it's a very, very distant dream.
Not even at a CGST level, sir?
No, but see, state has a control. See, each state, ultimately what happens, share goes. It is not only the CST, because CGST share also, part of it goes to the states.
Yes.
Therefore, the question of a consolidation there, again, is a challenge. It is purely a federal issue, and we have traveled this far, and 99% of GST decisions happen successfully. We can't rock the boat at the moment.
Thank you, sir. So we'll leave that with the last words. With that, thanks a lot to all the panelists here. Thanks a lot for all of you to have kind of sustained this session for long. We have our times are up, so thank you. Back to the host. Thank you.
Thank you, Mr. Prateek Jain, to you for such an engaging session, and a big thank you to all the panelists. Can I request all of you to please come forward for a group photograph? I request all our panelists to please stay back on the stage since this session was about GST second generation reforms, including technology. We're going to be unveiling a very special book related to the same topic. And to do the honors, I request Mr. Shailendra Kumar to please join me on the dais.
Good evening. We have a very recent and latest publication, the Goods and Services Tax, a very comprehensive commentary authored by very senior advocate, Supreme Court of India, Ramakrishna Viraragaman. I guess he's around. He wants to present this to each of the panelists. So friends, this book apparently, has a very special chapter on CGST amendment, IGST amendment with respect to casinos, race course, and the burning issue of online gaming. So it has taken 4 years, to compile this, to write this book, published by Oakbridge, and
several volumes. He has to write several volumes on online gaming for next 15 years.
and apparently, several distinguished jurists and policymakers and indirect tax experts have endorsed it, including my friend Pratik has done it. I can see it here. And of course, Mr. Lakshmi Kumaran has done it, and Justice A.P. Sahi from National Judicial Academy, Bhopal. And it's a pretty good book coming from a legal exponent.
And I request C.A. Sanjay Agarwal, auditor to TIOL Awards, to please join us on stage to present our panelists with a small token of appreciation. Once again, a big thank you to all our panelists, and we would also like to thank our state partner, the state of Rajasthan, for extending their support for the TIOL Congress.